This video is about one of the technical indicators called Elliott Waves. Now, Elliott Waves are something that have been around a long time, and the basic principle behind Elliott Waves are the fact that something we all know. When a stock is moving, it moves in waves. It does not move in a straight line, even if it's moving really strongly. Okay, if it's really strong, it's going to still move up and down in waves. So this is what happens. There's an initial move, and it can be strong and have a sharp pullback, and then you have a fairly lengthy move. It takes longer, but it goes higher, and then you have a pullback, and then you have a little bit higher high, and then it fails. It comes back to the previous low point, like at 4, and when it goes to make a higher high, it fails, and it starts to go down. And that's how you know at the failure that the new direction is now down. The sellers are now in control. So this goes by the basic definition of an uptrend, which is higher highs and higher lows. So on this chart, there's your first high and there's your first low. There's a higher high and a higher low. So this high is higher than that high, and that low is higher than that low. Then you have a higher high there, which is higher than this one. And then you have an equal low to this low. Okay, that's your first signal we might be losing strength because the sellers pushed it all the way down to there. And then when you have failure to go to a higher high, that's a pretty good indication the buyers are gone and the sellers are now in control. So if you see that intraday trading, that's a good signal that it's probably time to sell if you have purchased stock. And if you're flat and looking to enter, that's a good place to sell short right about there, because the direction has changed. The trend has changed and it's now going down. So that's something to be aware of. Now, what I don't like about Elliott Waves excuse me, is that they start getting way too complicated. They start talking about waves within waves and then more waves, and so it gets really confusing. And they say that all this type of wave happens on every securities move, and certainly intraday it doesn't work like that. So at least at the day trading level, I'm not buying into this. All this, every little wave you can understand and know in advance. I'm not buying it. So let's see how that plays out on a real trade during the day. Now this is Facebook on November 2nd, 2017. And this is a 2-minute chart, so each candle is 2 minutes. So right there at the open, you've got some wiggling at the beginning, and then you've got, in the first 10 minutes of trading, we break down to a new low. It gapped down and then it went to a new low in the first 10 minutes. Then you've got a wave back up and failure to reach a new high right there. And then breaking down to new lows. And there's your second wave. Then you've got another counter move, and then there's your third wave, which hits the low of the day. So right there is the end of the down move, and it happens about 11:30. So in this respect, this chart happens a lot like the previous chart, what I was showing you. Not that one. That one. It took 3 main moves to get to the end of the move. 1 down, 2 down, and 3 down, and you're at the end of the move. Now, something that Elliott Waves has in common with momentum indicators is the fact that it shows momentum ending and slowing down at the end of the move. So at the beginning of this move, you've got a sharp move down and it's fast, and you've got a fast counter move back up and then failure. So this is in the first 20 minutes of trading, right about there. The next move goes further and takes longer, and that's probably the biggest move right there, from there to there. And then you've got a more gradual and slower move up to here, and it's not very far also. And then it goes a further down to this low, which is a little bit lower than that price. And that's where the end of the move is. Now, another way that you know that it's the end of the move, besides the fact that it's not much lower than this low, is the fact that it's lunchtime. It's getting to be lunchtime. And almost every day around 11:30 to 12, momentum ends in trading and it can really slow down. And you see that right around through lunchtime, it gets pretty choppy. This is not a good time to be trading from 12 o'clock, which is right there, until at least, I'd say 1:30. These little moves are usually not big enough to even bother with trading. So those are two reasons to get out right there at about 12, if not sooner. But that's the basics of Elliott waves and how you can use them intraday trading. So just keep that in mind as you trade. And we'll look at some moving averages and momentum indicators next. Okay, good luck in your trading.